All right. So on today's video, we're gonna use technical analysis to capitalize on opportunity in the market. I basically want to walk you through how I would, you know, take advantage of an opportunity using technical analysis. There's a lot of different ways to use it, but today we're just gonna go raw. Don't want to waste your time. So let's go ahead and get started. We're looking at Chainlink, right? One of the hottest cryptos at the moment. I'm more bullish on this crypto than anything else for a lot of reasons. You can go check the other videos that that I've went over. But today we're going to look at price. I think we're going to get a pullback here. And we're going to start, if you can see at the bottom of the screen, you can see, how I'm thinking through this. I think, I see a pullback happening with price action. And these are the tools at the bottom of the screen. If you're not familiar with them, you can look them up, but you're going to get a real experience on how somebody might use them, right? So bearish divergence, first and foremost, right? We're going to look at the RSI for that. There's other ways to look at bearish divergence, but my main way of looking at this, and this just means there is a hidden, not necessarily hidden, but there is definitely, a signal that price is going to turn bearish. We don't know how far, we don't know how long. All we know is the buying pressure is, decreasing while the price is going up. And let's visualize that, right? By the way, we're going to go over Bitcoin and Ethereum too. So you see the price since July 25th or 22nd, right? Since the end of July, price is making higher highs. At the same time, we have the buying pressure making lower lows. So that tells me there's less buying pressure in the market while price goes up. That's a setup for a correction. Now we are in a bull market. I think this is the strongest bull market setup. So this is great for a buy the dip. This is what I'm going to do, right? This is not financial advice. This is, I'm not saying go buy it. I'm just saying this is how I would look at it. So we have the bearish divergence. Now we want to see, right? So price up, buying pressure down. There's going to be a slippage. Something's going to slip. I'm going to go to my comments real quick. I see you guys live. We are live, so it's a live video. If you want to jump on. How you doing, Hassan? Been a long time. Hope everything's good, my guy. Hassan, you need to jump in the Discord, bro, if you have time, if it fits your schedule. All right. So we have bearish divergence. Now I want to see, okay, where might we go? Look on the bottom. We're going to use anchored VWAP first, right? So anchored VWAP is a tool on TradingView. You can look it up. It's live. You can see how I pick it. So you're going to hit this. You can rewind it, obviously. Anchored VWAP. We're going to click it. I'm going to use two. I'm going to use the low of the low, right? The previous cycle low. And of course there's, lows back here, but let's go to the closest low, right? So we're looking at August 3rd. Bam. So that gives me one target. Now we're going to go back even further just to get some more context. This doesn't mean these are all models. None of them are perfect. They're just going to give us a target. Now we don't need RSI anymore. We already know, hey, bearish divergence. We're looking for a pullback, right? There's always pullbacks in a bull market, right? So here we go. Now we got 2 points. We have 23 and we have 19. My assumption is we're going to pull back somewhere in the middle, 21, 20, right? This is sort of where my target is. That's one way. We're looking at anchored VWAP. Next, we're going to use volume profile, right? So we're going to go anchored. Well, it's anchored volume profile. So we're going to use anchored volume profile. Now, for this one, I'm going to do the same thing. I'm going to go back to that previous low. I'm going to click it. It's going to give me 3 targets. This, the lowest low where there's volume. These have names, but all you got to do is look at the 3 lines, right? The one in the middle is the midline. The one at the top is the upper volume profile. And you can do more research to look in exactly, how they work. The way I use them, it's just, you see these, they look like stairs, right? This is the most volume happened at 1350. This is where the most volume happened. Do I think we're coming all the way down here? Nah. No, I don't think so. So this gives us different context. I think we're coming to the cluster. You see the cluster where we're furthest out? This is where most of the volume was done. There, like I said, there is no perfect way to use this. There's the best way. There's the way that you see that makes sense most to you. What makes more sense to me is that you see these gaps. We're going to cover this gap, this 20.5 gap. So I think we're coming about 19 or 20, right? That's going to be my guess, 1920. So we use volume profile, and that lines up right with the anchored VWAP, okay, from this high, right? Now, another way to use this is to pull this forward. So still, look at, I'm looking at 19, okay, 1920. I'm going to pull this up to this, the previous low, the previous swing low. Now this gives me the lower limit at 2250, 26, and 27. I don't think that's accurate. I don't think that's it. I could be wrong. Let's say the market doesn't correct as hard as I expect, then our low is going to be about 22. So there's always a range, right? So 22, or this anchored view out 23, 22. This might be the low, but I think if the pullback gets stronger, if there's a real escalation of if the VIX really spikes, or investors really go risk off, then the lower limit is going to be around 1920. So upper limit, low, I'm going to say 22, 23. Well, we're at 24 right now, so I'm going to say 22, right? And then lower limit is going to be 19. I'm not going to go over this again. I'm just going to show this. My target, if I were to put all these together, is going to be about 20. All right, what's our next one? Fib retracement. So I'm going to take this off. I'm going to keep the anchored VWAPs on there. We're going to use Fibonacci retracement. So we're using multiple tools to get a gauge of where price might come, right? So we're going to use the previous low, previous swing low, pull that to the high. And where does this fib retracement give us? You can go look into the fibs. This is not about fib. This is about getting straight to the point, right? And it tells us 1966. 1966. That aligns with a lot of this price action, right? So if we were to pull this lower to the previous low, we could come all the way down to 15. I don't think we're going to see that. If we do come down to 15, that would have to be a very risk-off macro event, like the Fed says, we're not cutting in September. If the Fed reverses, keep in mind, this is macro too. This isn't just technical analysis. We use macro, and we'll talk about that later, about fusing all three of them. But today we're just focused on the technicals, right? And so if macro gets bad, we're coming down to 15, possibly, right? That's what it says. If it's just a nasty correction, we probably come to 1920. I think we're going to get that, right? Not nasty, a normal correction for crypto. And if really there's not much, then we might just come right here to 23, 22, right? So we're using those three. I know it's not super concise, but what you want to do is use all three of them. So let's use this. Actually, let's come all the way back here. Volume profile. Now let's layer, and we already have the anchored VWAPs. Now let's go ahead and layer the fib retracement. This is the big fib retracement. I don't want that one. I want to use the previous low. Okay. So when I look at all three of these, we have 1 point here. We have a point here at 21. So you have what? 23, 21, 19. Our anchored VWAP and our fib retracement are about the same. And this is where the volume really starts to come in. So again, like I say, when I look at all three of these, you can have a different, you can think about it totally different. You can have another explanation. There is no right answer. There's the highest probability based on what the numbers, the mathematics are telling us. So I think we're coming to about 20, 19 or 20, right? It may not happen. I just think that's the highest probability. Let's go to the next asset. As a matter of fact, do we go through all of them? Okay, buy, sell, cut rates. Great. So we're going to erase this. Okay, we're going to go to the next asset. Let's go to Ethereum. ETH USD. We should have started with ETH, honestly, because ETH is sort of leading the rally, even though I think Chainlink actually might be moving against ETH. Let's look at some internals here. This is internals. We're going to go to crypto. If we go to crypto internals, we're going to look at Link versus ETH. Who's leading? Okay, so it looks like Ethereum is leading, right? Link is breaking, the trend. Link since what? I can't see this. My phone's in the way. Since August 7th, Link has been trending against Ethereum, but over the last 5 or 6 days, ETH is winning. So let's go ahead and start with ETH. Well, we already started with the Chainlink, but we're going to go to ETH, right? Let's do the same thing here. And I already had this drawn up because I did a tweet. Matter of fact, go to Twitter, follow me on Twitter. That's where I'm posting most of these charts a lot, way sooner, so you can just see it. All right. Now, this is interesting. So what we do, we're going to start with the anchored VWAP. We're not using Bollinger Bands today. We're going to use the anchored VWAP. Let's go anchored VWAP. We'll use this low just to get some, a lower limit. And then we're going to use the previous low. We're not going to use this one. This one kind of happened quickly. I want to use this. I like this one. This one's in the middle. This one's in the middle. These arrows, we'll talk about that later. That's the Bollinger Bands. All right, so we have two anchored, right? We're already coming into this one. So 43. And remember, Ethereum and Chainlink might look different. Don't use every single metric exactly the same. Every asset's going to trade differently. So I can already tell if ETH really pulls back. I got 4,300, but there's a slight chance it comes all the way down about 4,000, right? If you get a nasty correction, we might come down to 4,000. I think I had about 4,300 though. So there we go. We got the anchor VWAP. Let's layer some more on. Now that we have context, let's go ahead and do our volume profile. Okay, anchored volume profile. Where do we put it? That's the question. Well, we have one pullback here. We have another low here, right? Or higher low. And then you have the one back here. I'm not coming back here. We're not having a macro event. This is not a nasty macro event. I'm going to say we're here. Okay. So here we go. We got a lower limit around 43. This is where I think we're at 4,300 for ETH. I think we're coming down to 4,300. Okay. So 4,300. Now next we have fib retracement. We're layering all these together to see, you know, what might be the highest probability of that pullback, or where might it be? I'm going to start here from this and then pull it to the top. Okay. Now this one's nasty. This one has us at 3,900, right? I don't like that because I'm biased. I don't want to see 3,900. So what I'll do is pull this up to this low, okay? Which 3,900 is possible. That's a macro event. That's you know what it is? We're going to talk about it at the end. That's going to be if GDP on Friday comes out worse than expected, if CPI and if PC inflation comes out worse than expected, and if tomorrow, I think we have housing, shelter inflation tomorrow. Okay, shelter inflation. If that comes in worse, then we could slip all the way to that 3,900 for ETH, and then it'll bounce. We're in a bull market, right? Either way, if everything comes in as expected, I think we're just going to get a fundamental pullback, right? A normal pullback to about 4,300. That's my guess, 4,300. So this is how I use technicals, right? All right. So we went through all that. What am I missing here? Bearish divergence. Well, let's do a double take on the bearish divergence. Okay, let's get rid of these so you can see what I mean. This is why, I've been saying on Twitter, hey, we have bearish divergence on all crypto. You see the buying pressure peaked back here in, July 21st. And what's it doing? It's just moving lower. The buying pressure is moving lower. That's a bearish setup, okay? Doesn't mean we're going to all-time low. It just means we're going to get a correction, okay? Highs here. It doesn't mean we will. It means the probability is elevated, okay? And then price is moving up. So there's your bearish divergence. We're going to break down, right? Now, if as an example, if we go back to I want to say the weekly chart on ETH, back to the last cycle, and this is why I really, trust these bearish divergences. You can see our last bearish divergence was the top of ETH, okay? Check it out. This was Ethereum in the last cycle. I watched this like a hawk. What did we get? You had price put in the highest RSI. The highest buying pressure was back here, January 2021, and price just went up, from there. Price keeps going up. Now, this is the weekly chart, so it's a little different, but the buying pressure continued to fall, okay? And that was pretty much, once you got under 70, ETH rolled over. That was the peak. Now, this was tough. You're also hitting a lot of resistance here too, right? This is a lot tougher. This is a weekly chart. So it really, Ethereum was so strong, it went up for weeks and weeks and months, even though it had bearish divergence. Okay. I'm sure there's some daily divergence on that too. Let's see if it's there. A little better example. Do we get any daily? Well, we did have this. I remember this thing. This thing was nasty. This was in the summer. I remember this like a hawk. Look at this dip. This dip happened in probably February. I swear I'm not even looking at the dates. February didn't recover till what? May. Let's see if I'm right. Okay, it started in May, so I'm a little off, and then it came up in July. All right, I don't even know what I said. I just remember that I was panicking right out. That's when I first got into crypto, and I was down like a lot. So anyways, point is, bearish divergence is a signal we got to pay attention to. It gives us a little bit of evidence that something is changing in the price action. All right. So on the daily, you had price falling, 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 and it did pick up. So that kind of maybe the daily wasn't the best example, but you still have it. Look at, you still have bearish divergence. You had a high here, and buying pressure went lower, and that's when the price at that same point in time. Okay, this is the first time we've done this, so this is not a recorded scripted. This is just literally raw. So here you have the high here, and price keeps going up. So that next, if this thing peaks and starts to roll over, it's just more likely we're going to get a rollover in price. That's bearish divergence, right? Price up and buying pressure lower. Not the best example, right? Because this was a very strong period. You had a lot of, you had rate cuts and you had money printing. So that kind of made it tough, right? We're not there yet. We don't have money printing yet. We do have a lot of liquidity, but we're not there. Now, when the Fed starts cutting and releasing liquidity and the market's strong and the economy's fine, the divergences, you have to be more patient because price can really continue to rip. And I bet we have another example of that bearish divergence somewhere. Let's see. Do we have it here, here, or is bearish divergence? Who knows? We're not looking, whatever. Okay. I know it's on here. More than anything, it's going to be the monthly chart. I think the monthly is clean, if I remember so. I just wanted to check out the weekly. Okay. Where are we? Let's go. Come on. Okay. All right. So let's do monthly chart. I think we had it on the monthly. Let's see if I remember. Yeah, I guess you did. It was a little cleaner on the monthly chart, right? So check this out. Here's point A, and what I'm measuring from is the high in the RSI. So here's your RSI high, okay? Here's your high in the RSI, and this was April 2021, okay? April 2021, and where was price? Price was right here. It almost made a high 2,800, okay? So let's bring this up to that 2,800 to match it. There we go. All right. So price continues to climb while the RSI falls. And eventually, once the RSI gets beneath the upper limit, which is about 70, boom, price collapses. Okay. So bearish divergence, buying pressure lower, decreasing, price increasing. You're getting closer to that point where price is correct. This is monthly, right? Today, we're looking at the daily. Same thing. Same thing. Not every cycle is the same. It just gives a signal. So what are we seeing today? We're seeing RSI fall, right? Buying pressure is coming down, less buyers. That's not necessarily true. Just know the buying pressure is lower because who the hell wants to buy up here? They want to buy down here, which is why we have our buy at what 4,300. I think is going to be about the low. We could slip lower. We can come down to 38, 39. I think that's going to be tough. It just depends on the macro. Okay. So anyways, same thing here, bearish divergence. All right, let's go to Bitcoin. Same thing. We probably have the same thing on Bitcoin, BTC, USD. This one's already playing out. Bitcoin's sort of leading the rollover, and I think it might finish. I think Bitcoin dominance might even pick up a little bit for like maybe 3 or 4 days and then roll over. But look at Bitcoin dominance starting to pick up today. Why? Because it's one day. It doesn't make a trend, but Bitcoin dominance going up today just tells us that people are, investors are like, hey, you know what? I don't know. Let's take profits. BTC is lower. Ethereum's at all-time highs. Bitcoin is lagging. So it's a little weakness in the alts and the more risky stuff, right? There's a little more weakness in the riskier stuff as of today. Anyways, back to it. BTC USD. Let's look at this bearish divergence. I already have my stuff lined up. This one, I was looking at let's use a different one. Let's use a raw chart. BTC, we'll use Coinbase. Do I have anything on there? No, I don't. Okay, cool. So bearish not bearish divergence. Let's go ahead and look at, bearish divergence. My bad. Bearish divergence for Bitcoin. All right, you're looking at RSI. Look at the buying pressure. Here we are. It's coming lower. Okay. Here's the peak. Here's the peak in buying pressure. And price went up, sort of. It's not the strongest signal, but price did go up, but the RSI is falling. Okay. Now this is clear. We're probably going to retest the 30 level. So I think BTC, I had a price target of 110. We could come down to, which is why I had it on that other chart. I think we could come down to, we're going to come down to like 107. It looks like, I don't know what we're going to do, right? Either 107, somewhere in this gap. Now, how do we measure this? How do we know? Does it come down to 101? Nah, I don't think so. I think we're coming to about 105, 110, 105, possibly, right? We don't know. It's all probabilities. Now let's use our our retracements to see what that might actually look like, right? Let's look at our key levels. How do we find those key levels? We know, hey, the signal is the investigation tells us we have a bearish divergence setup, right? We have a correction, we have a pullback setup. Now the question is, where are those levels at? Let's use our anchored VWAP first. Okay, let's go ahead and go to this is a new low, so we're going to go to this low. Okay, let's plant it right there. Oh, it already dropped. It already dropped. So that didn't work. That's even more bearish, right? That tells you it's even weaker. So we're going to go back to this one, even though that's not much. We could be bottoming here at 110, okay, for Bitcoin. Let's go a little lower. I doubt it's going to be this low. Okay. What does that put us at? 105. So these are I mean, shoot, as we're speaking, this thing is selling off as we're speaking. So those are our levels. Those are our levels. It looks like BTC is going to come down to the anchored VWAP from the previous low, which was the last, the April low. That makes sense, right? All the volume, anchored VWAP is volume weighted average. So levels are great, but I want to layer the key levels, right? The horizontal levels, support and resistance. I want to layer that with a dynamic support and resistance, right? I want to layer that with a dynamic support, which is the volume weighted average from where the bottom of Bitcoin, where the bottom was, where the buying pressure really stepped up back in April during the phase one of Trump's reset. Okay. So lowest, my guess would be highest probability we come to 105, right? I think we stop at 110, but damn, we're already there, right? Now let's go ahead and let's look at our volume profile. Okay, we're going to layer this on. It's going to look a little messy, but I want you to see everything converging. I'm going it straight here. Okay, we already slipped it. We had already slipped. So just looking at this stack, look at this stack, this next stack. These, just think of these like, I don't even know what the analogy is. Think of these like empty space. The more the space is filled up, the more support, the more empty it is, the more likely price will fill that gap. Okay. Maybe that does make sense. Maybe it doesn't. So yeah, 107, 108. That's what it looks like. It looks like we're going to come to 108, 107, possibly 108. Pretty strong pullback there for Bitcoin. MicroStrategy, I think, is a great opportunity right now. Looking at this, okay. All right, so we got our anchored, our volume profile. But what I want to do is I want to pull it back even further. Let's just go ahead and pull it back to. We're gonna pull it back to. Let's go to this low first. Let's check this one. What does it give us? 106. That's probably our best bet. 106, and then all the way to the low. It's giving us, 105, 106. That's what I would say. I think I'm going to go ahead and say Bitcoin 107, right? And it's going to be quick. It'll probably be quick and sharp. We're in a strong uptrend. The Fed is cutting. Don't get confused. We're not going into a bear market, right? We're still bullish as hell, but some people are taking profits, all right? And they're going to be leveraging back in. There's a lot of leverage in the system overall if we look at internals. So I'm going to say Bitcoin 107, 107, 108, who knows? And Ethereum, we're going to say 43, 4,200. And then Chainlink, I'm going to say 1920. Those are my levels. Okay, those are my levels using, we got Fib retracement still. Let's go to Fib retracement. So 98,000, we're going to measure that up. What does it give us? 107. Usually Fib is pretty accurate. The Fib is pretty accurate, right? But I'm going to use all of them. There's not one, like I said, there's not one perfect indicator. I'm going to layer all of them and just see, hey, where's the highest probability that price tests, what's the highest probability level? So 107, I'm going to stick with 107. Let's go 107.50, right? Or 500, 107,500, whatever. 107.50 for Bitcoin. All right, cool. I mean, if it really gets ugly, we're retesting 91. I doubt that. There's no way. There's no way, right? You'd have to have a nasty macro event. And I think the Fed's already pretty much put the nail in the coffin that, hey, expect liquidity to rise. So I'm going to go with 107.50 on Bitcoin. That's pretty much all I wanted to share today. So I'll mark these levels off. We also have BMNR too and MicroStrategy. Maybe we'll mark those up a little bit. Okay. Actually, you know what? BMNR, I don't really like this one. It's so diluted. It's hard to really put a level. It's hard to put a level. I'm only watching upside and maybe previous, like a couple, like you have to be short with this one. The market cap is diluted. It continues to be diluted. So it's kind of hard to know, where you might be with BMNR. It's a little harder to measure. The chart is not as true as Ethereum. It's just not as true as Ethereum. For example, let's throw on the market cap. All right, so look at the market cap. The market cap is, I guess it's not too bad. It's really not that bad, but the low in market cap was 5 billion, 5.5. Oh no, not 5.5 billion. It was about 7.5 billion, 7.5 billion. And now we're at about 9.5. So I don't know what percent that is, but price is almost down there. So it's not too bad. I guess the dilution is lining up with the price a little better than it was in the past. That's not bad. So what our high is 13 billion. Okay. It looks better. BMNR is basically the net asset value is coming into a better point of value. So maybe it does get bought up pretty quickly. I like BMNR. I like BMNR. All right. MSTR. MSTR is the same way. It's going to be harder to really gauge because of the dilution, but they are stacking Bitcoin. So really, you just want to look at Bitcoin. You want to look at Ethereum and do those technicals and assume these are following. Okay. Now, when we do get upside volatility for Bitcoin and Ethereum, naturally MSTR and BMNR should outperform Bitcoin and Ethereum, right? They should. They always have. You just need that upside vol. So let's just set a trend. This is probably easier to use. We need MicroStrategy to break out of this trend. Probably needs to get back above 400. Yeah, it needs to get back above 400. All right. So I think we covered everything. Bearish divergence, BTC USD. Let's do it one more time. I'm going to throw the levels out here so you can see it. Bitcoin, I'm looking at 107.50. Okay. You know what I mean? 107,000. Don't need to get all pretty and technical, you guys out there in the comments. That's not the real price. You know what the hell I'm talking about. We don't need to be perfect. All right. All right. So 107.50. That's what I'm gonna have for Bitcoin. Ethereum. Let's do 43. Now I want to say 42 now because we're slipping so quick before these meetings. We're already at 44. 43. I'm gonna change this to 40. Damn. That was quick. See, where's our RSI at? Damn. You know what? I'm going to take Ethereum to 4150. I'm going to take it to 4150. Let's double check this. Do we have 4150? Yeah, here's the bottom level. 4150 from that last low, from that previous low. 4150. And then I think our anchored, let's do Fibonacci. Where's our fib take us? 39. The fib takes us even lower. What about the breakout? 4150? Sure. So the fib's even lower. The fib tells us we're going back to 4,000. Right? 4150. That's tougher. Ethereum's tougher right now. There's a lot of, there's a lot. I think if it does slip to 4,000, it's going to quickly get bought up. That's just what I think, right? Now, CHAINLINK, this is what I'm most bullish on CHAINLINK. I want to see this happen. I'm trading it. I'm trading it too. Okay, now CHAINLINK, I'm going to keep that at 1920. 1920 is where I have my CHAINLINK, okay? Let's go 1950 or 20. Oops. 1950, 20. All right, so that's what we're looking for. That's what we're looking for. Now, do you buy or sell the rate cut? Now, the overall market, okay, that's pretty much all I want to do with the technicals. I'm going to start drawing, okay, our anchored VWAP from Jackson Hole for the S&P 500 as a baseline. Jackson Hole was the big meeting. That was a market moving catalyst event. So we want to measure our anchored VWAP from that event. We don't really have much data. Let's go to 30 minutes, see what it looks like. We're below that. So it does look like the overall market is selling off, right? Investors are taking profits So it looks like what we're going to see here, we're at 44. It looks like what we're going to see here is a retest of Jackson Hole, the Jackson Hole low. Looks like we're just going to get a retest. Okay. We should get a retest here. Now, I don't know where that takes Bitcoin and Ethereum, but it looks like we're going to get a retest here. Now, interesting enough, very interesting. Okay, let's go Tesla, TSLA. This is very interesting for me. Tesla's starting to break. Keep your eye on Tesla. This video is not about Tesla. I want to make a separate video for that later, but Tesla looks damn near good. Tesla's breaking out. This can keep, consolidating if the overall market retests, but you've got to keep your eye here. Tesla is very close to ripping, and I think when it does rip above 350, it's going straight to 400. It might take 1 or 2 days. It's going to go to 200 or 400 quickly, and it's pretty much lights out from there. All right. What else is it? The VIX. This is why I'm like, hey, we might need a pullback. The VIX keeps supporting that 15 level. We need to get below 15. We're going to head to 12, right? One standard deviation from the average is going to be 12. 15 is a normal support for the VIX. We've already seen it, almost 4 times. So I say, hey, we slip under the VIX, we continue to melt up. But if we keep getting support at 15, the VIX is going to try to make a move back to 20. If it makes that move to 20, we're going to get a nasty correction. That is a buy the dip. So what am I looking at? I'm looking at this. More than likely, we're getting a dip. And I don't want to tell you what to do. Like I said, this is not financial advice, but I'm going to be dip buying. Right? I'm going to be dip buying some of this stuff. I definitely want to get if I had to narrow everything down, I want CHAINLINK at 20. I want CHAINLINK at 20. That's what I want. All right. All right. So what else we're going to look at here? Oh, buy or sell the rate cut. Okay. Buy or sell the rate cut. Let me think that through. I haven't even thought this through yet completely. I wanted to do it live. So I'm going to put up to see the dollar. What's going to be most affected? Interest, probably the 10-year. Probably the 10-year. Put to call ratio. See where's the move index. Not really doing crap. Okay. Let's go to the 10-year. Interest rates are key. Or the bond market is going to be key. So here's what I'm seeing. Jackson Hole on Friday. Rate sold off, meaning people bought bonds. Actually, let's go TLT. Yeah, let's go TLT. Here's the bond market. We really want to see bonds move up. We want to see, the market, the investors in the bond market to keep buying bonds. That's going to lower rates automatically. So the question is, going into the September rate cut, when is the rate cut anyway? When would it be? Let's see how many days we have out here, because we might get like this middle of the month sell off where I thought we would be, bullish into the rate cut and then sell off, which we could still do. We could still do depending how many days are between. But we also could sell off, and then right before the rate cut, we start going up. There's two scenarios, but what you got to understand is either way, the market is bullish for the damn rate cuts. Either way, you're going higher. Either way, buy the dip. You're going higher either way. You just have to be patient so you have a better risk reward. That's what the technicals are for. Okay. So we have inflation September 11th. We'll see how that turns out. Imagine if the inflation is terrible and the Fed has to say, we're removing the rate cut. When's the Fed meeting? When is the next Fed meeting? Why am I getting cut off in September, bro? Why is this stupid calendar cutting me off? Next month. I want to know when the Fed is. Oh, okay. I'm just looking at the. Let's see. Fed meeting. Oh, I should have just shortened it. All right. So it's going to be September 17th. Yeah, we have a lot of time. We have 20 days. We also have Nvidia earnings, huh? That's probably another thing. We have Nvidia earnings. When is it? Or don't tell me Nvidia's earnings are today. Okay, Wednesday. All right. So we still have another catalyst, right? Now, does this affect crypto? To a small degree. But we all know Nvidia demand is insane, right? Forget the stock. It's not the stock that we need to go up. I don't think so. I think it's just the CapEx, right? How much capital liquidity, CapEx liquidity, are spending on AI infrastructures coming into the economy. That's what it is, because that's going to fuel the manufacturing cycle, the industrial cycle, the ISM, blah blah blah. We're getting a little too technical here. But the Fed should be cutting September 16th. So here's what we might see. We might see a sell-off into early September, right? Maybe September. We might sell off all the way till core inflation September 11th. That's a long time, man. I don't know. I really don't know. I really don't know. But that's the question we got to answer here. Is the market going to sell off into the rate cut and then bounce higher, or is it going to turn bullish and climb into the rate cut? We don't know. But that's how I'm thinking about the market. I think we have too much time, too many catalysts in between to really make a significant prediction right now. Right? So I'm just using technicals. I don't know. As we get closer, it'll be more clear. But I know for sure what we do see is we have Fed inflation on Friday. So that'll take us to what, the 29th? Yeah, it'll take us to the 29th. Once we get through that, we'll already be in September. And it'll be a lot easier to tell if we're going to sell off if we're going to do a buy the rumor, sell the fact, or sell the rumor, buy the fact. We don't know yet. We're too far away. We have Nvidia earnings. We have PCE inflation. Once we get past that early September, it'll be a lot easier to tell whether the correction gets worse or whether it's only going to be the next 5 to 7 days. Okay, we don't know. But this is a strong bull market. All right, well, that's all I have for the stream. Stay vigilant. I'd say the easiest way to really gauge whether you're going to get a big dip is just keep watching this damn VIX, right? It condenses all the information. Watch the VIX. See how it's bouncing? 15, 15, 15 support. It's going to try. It's definitely going to retest 16 or 17. That's easy. The question is, do we run to 20? Do we go all the way back to 20? If we do, if we break this level, you wake up and the VIX is over 18. Wait for it to get to 20. If we break this level, be patient. It's going to get to 20. It's going to show resistance. There's no way it goes above this. The Fed's already announced they're going to cut. Now, there is a probability it does, but it's a low probability. You got to be vigilant, right? Especially if you're trading, especially if you're just trying to capitalize, right? If you're just buy and hold forever, well, this is all kind of irrelevant for you unless you just want to find a good spot. So we'll keep our eye out on the VIX. Now, here's what I'm playing. Here's what's playing out in my head. We're going to get Nvidia earnings. Watch how the VIX responds. We're going to get on Wednesday. We're going to get GDP and PCE. So, economic growth. Is it a positive surprise? Negative surprise on core PC or the Fed's inflation gauge? We want to see how the VIX responds to those two events. And then we can go from there. We'll have more clarity if the dip continues or if it's more likely we're going to get bought up. Right? That's all I got. Appreciate you guys. Stay blessed. Stay vigilant. And we'll catch you in the next video. Peace.